Learn everything you need to know about the stock market with our beginner's guide.
The fluctuating stock price bothers Rahul as an investor. In this video, Rahul will learn why the stock price moves up and down. The stock price moves up and down simply because of supply and demand. When the supply of a stock is greater than the demand, the price of the stock will fall. And when the demand for the stock is greater than the supply, the price of the stock will rise. Rahul wants to know the reasons behind the sudden increase and decrease in the supply and demand of stocks. There are many different kinds of people who invest in the market, such as individual investors, high net worth investors, foreign institutional investors, and domestic institutional investors like LIC, Aditya Birla Groups, etc. These market participants buy and sell shares in the secondary market. Their change of opinion causes the imbalance in supply and demand. Rahul reads about the stock market every day, and one day he saw an article that said Sun Pharma's quarterly sales went up by 15% and their quarterly profits went up by 7%. Rahul wants to know the impact of this news on Sun Pharma's stock price. An increase in the revenue and profits of a company is considered positive news. This positive news increases the demand for Sun Pharma stock, as investors believe that the stock might give them higher returns in the future. Increased profits increase the likelihood of the company paying out dividends to shareholders, which is also one of the reasons for the increase in demand. Due to the lower supply and more demand for the Sun Pharma stock, the seller of the stock demands more money for the stock, so the stock price moves up. The headline stock price, which we see quoted on the stock market, represents the most recent transaction. We are now on the NSE India website, where SBI shares are quoted at 520 rupees. This means that the last time someone bought and sold SBI shares was at 520 rupees. The price at which the buyer and seller agree to make the trade is called the last traded price, or LTP. Rahul can use the Goodwill Trading Terminal to check the LTP of Sun Pharma and the prices of many other stocks. After a week, Rahul read an article about Vedanta that stated that Vedanta's revenues had dropped by 17% and profits had dropped by 9%. Again, Rahul wonders what effect this type of news will have on Vedanta's stock price. A decrease in the revenue and profits of a company is considered negative news. Negative news translates to selling pressure, as investors become pessimistic about the company's future and feel that the company may not be worth investing in, which means people are willing to sell more of Vedanta's stock. The buyer buys the stock at the lowest available price, since the supply of the stock is greater than the demand. This pushes the last trading price, LTP, downwards. Rahul now understands how positive news increases the stock price and how negative news decreases the stock price. The news about the Indian economy and the world economy also affects the stock market. If the Indian economy is doing well, the market will react positively. Fundamentally sound companies will always find a way to rise, even if the market declines due to unpredictable events like pandemics, wars, and short corrections. When the market is down, investing in blue-chip companies can be a good way to earn higher long-term returns. Investing during a market downturn is known as buying the dip. Rahul understands the reasons for stock price fluctuations, he will be able to make more informed decisions about when to buy and when to sell the stock. Rahul will discover more about the stock market index in the upcoming video.